All right, so these problems in module 6, there are 6 of them. There's 4 that are kind of linked in terms of case 1 and 2 are very similar. So I'm going to work through case 1 and then you can apply that to case 2. Also, case 4 and 5 are very similar. So I'll work through case 5 and you can apply that to case 4. Case 3 is something that you can figure out by visiting the video lecture and reading through the notes, but does incorporate important concepts. So let's look at case 1. And so we have a company Joywave, and we're trying to complete some information about 20x6 income statement. It gives you information. The first bullet gives us information about retained earnings account. It gives us the beginning balance and an ending balance. Then the next piece tells us about the accumulated other comprehensive income account. It gives us a beginning balance. It tells us the next bullet is about the tax rate, which is in this case 40%. They declared and paid $250,000 of dividends during the year. And then they have 2 items, an available for sale security with a batch of those with an unrealized gain of 35,000. That's a pre-tax amount. And and then there's a depreciation in US dollars. So there's a foreign translation gain of $50,000. And this should also be pre-tax. So when we're working through this, one of the things that I really emphasize is the ability of taking income statement information and understanding where that information leads to on the balance sheet. So we have 2 accounts that essentially all income statement information ends up in. One is the retained earnings account, and one is an AOCI account. And we're going to go ahead and just create T accounts for those and then fill out the information that we have. It began the year with $1,756,000 in the retained earnings account. I'll just drop the zeros. And then it ended that year with a balance of $1,824,000. So there is some information that's missing. We have some of it. We may have to figure out other pieces, but right now I'm just filling in what the bullet points tell me. AOCI begins with a $50,000 debit balance. So that means that this company had a preponderance of unrealized losses that are driving that accumulated balance of overall loss. Remember, AOCI and retained earnings can have debit or credit balances. If they have debit balances, they reduce shareholders' equity. The other information we have, Joywave declared and paid $250,000 of dividends during the year, and we need to know what to do with that information. Since they are paying these dividends to their shareholders, when a company is paying dividends, it's always to their shareholders. So that $250,000 is going to need to be closed out. So remember, when we close out those dividends, we're going to credit dividends, and the corresponding debit is to retained earnings, which reduces our retained earnings. That's why we have a reduction to retained earnings when we pay dividends. Is that closing entry makes it happen. And so now we have a little bit more in our retained earnings account. And then we have these unrealized gains in both available for sale and the foreign translation. And remember that since these are pre-tax, we need to take taxes out of them in order to incorporate them in my AOCI account. Everything in the AOCI account is going to be on a net of tax basis. So we have the $35,000 gain, and that's from my AFS securities. That's an OCI item. It should be closed into AOCI. And that gain is a 40% tax on it. So that'll tell me about how much to strip from the gain. In this case, 40% of 35 should give us 14, I believe. Would that be correct? 10% is 3.5. Right. So that should be 14,000. That's my tax effect. So it increases my it will, sorry, not increase, but decrease my gain down to 21,000. That's my net of tax gain. And then we do the same thing with the $50,000 translation of foreign currency. Foreign currency translation is a $50,000 gain. And we'll strip off the $20,000 tax, which leaves at 60% net of tax, the 30. Right. So this is net of tax, the 30 is net of tax, and we're going to incorporate both of these, the 21 and the 30 net of tax, in my AOCI account. So now when I go to reconcile this account, we have 50 over here, we have 51,000 of credit. And so we'll end up with 1,000 of credit balance. That will be my ending balance of AOCI. So I incorporated the 3 zeros there. I had just been dropping them for ease. But it is 1,000 after we consider the zeros as well. So the other thing now we need to figure out is, well, what's going on here? Because the two things that were really asked of you is what is the accumulated other comprehensive income and the comprehensive income. So we really do need to, keep a focus on the difference between CI versus OCI versus AOCI. So these guys, AOCI is a balance sheet account and it accumulates all of the OCI, right? Because we have OCI, OCI. The only thing we're adding to AOCI is the accumulation. So it accumulates all OCI over time. It just keeps adding it in, adding it in. Right? That's exactly what happened up here. We had an accumulated unrealized loss of 50, but then during this period, we added in some gains. So the accumulated balance of AOCI is now a $1,000 gain. OCI are individual income effects or individual effects to comprehensive income, right? Remember, in order to get comprehensive income, what we take is net income. We add or subtract because our OCI items can be gains or losses. And that gives me comprehensive income. So comprehensive income isn't an effect, it is the total of net income and OCI. So make sure that you study this to the point that you understand the difference between these three. It's easy to get them twisted and flipped around because obviously we're just adding a letter, right? CI to OCI to AOCI, and it indicates different items. All right, retained earnings. If we want comprehensive income, we have our OCI, right? So that is just the 21 and the 30 for this period. Because remember, net income as well as comprehensive income, these two items are periodic totals. Like we have net income for the year, right? Or comprehensive income for the year. These are the things that happen during this year. So the 21 and the 30 go in here because these are like our individual, right, gains and losses that occurred during the year. The 50 and the 1 do not, because the 50 is an accumulation of a whole bunch of things that happened years and years and years before, right? Parts of this, we don't have the T account to expand, but This 50 was arrived at after compiling OCI in various periods. The only period we're concerned with is the transition from the $50,000 debit balance to the $1,000 credit balance, which is explained by this 21 and the 30. That's why that's my OCI items. They happened during this period. The other two, the 50 and the 1, those items are totals, right? They are summations at a point in time. So in order to get my comprehensive income, both of these are positive, both of them are gains, and they're both net of tax. We do want to keep them net of tax when we're determining comprehensive income. We just need that net income number now. And we can get that number because we know net income is what's missing from this retained earnings derivation. We have a beginning balance, we have an ending balance, we have dividends. So basically, we're solving for net income. And if we solve for that, what we would do is take 1,756,000, that's our beginning balance, subtract off the 250,000, and what that gets us is 1,506,000. But obviously, that's just those two effects together. Now, our ending balance is 1,824,000. So we need to add something to get up to this ending balance, because right now we're just at 1,506,000. So what I'm going to do then, in order to figure that out, is just take the difference between where I'm at now with just these two and then figure out how much more I need to add to get there. It's going to pop up as a negative, but that doesn't matter. It's still the correct answer. It's 318. So that's my net income. That's where I start. I add these two gains to it, which will have a cumulative effect of 51. And that brings me to 369. This is my comprehensive income. Okay, so take that and apply it to the case number 2 and see how it works for you. Definitely want to understand how OCI and net income play together. Case 5 will actually look at it just a little bit more, but in a more formalized way with an entire income statement.